Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is February 24th, 2023. This is the Morning Forex Technical Report. But before I get into that, in just a few minutes, Adam will be hosting a webinar. You can sign up for it. It's free. How to get an edge in trading the news. Just go to our website at ForexLive.com. There's a post right there. Click on the register button, and it starts at 9 a.m., so top of the hour. So get in there right now, log in, and see what Adam has to say. I am sure you will not be disappointed at all. So with that said, let's get into the technicals. We just had Core PCE come out stronger than expectations, 0.6% for the month-on-month, 4.7% for the year-on-year. That is up from 4.46% last month. We did have revisions to the prior month, so we are already starting from a higher base, but the expectations was 4.3%. So we are seeing stocks move to the downside. The Dow Industrial Average is down minus 360 points, and the NASDAQ futures are down, are implying a decline of minus 218 points. We're seeing yields move higher with the 2-year now up 7.7 basis points, the 10-year is up 6.0 basis points as I speak. This is the, let's take a look at the euro versus US dollar, and the dollar is moving higher, continuing that trend that we're seeing this week with a steady decline here to try to get above this topside trend line here, just because we're going sideways, but the market couldn't do that, and the market started to use that topside trend line as resistance before moving to the downside here, and the next target on the downside comes at this trend line, where the lower trend line, which currently comes in at 1.0530 or somewhere around that level, 1.0530. Taking a look at the daily chart, this is what it looks like here. We fell below the swing area right through here at 1.0573. That's now a close risk level. Yesterday we came down to that level, bounced up, and in today's high price reached up to the top end of this swing area near the 1.0615 level before moving to the downside. So we're breaking to the downside. Really, this move up from the September low to the high, 38.2% retracement, comes in at 1.0460. That would be our next key target on the daily chart. And as you can see, the daily, the 100-day moving average is moving up closer to that level as well. So there's a room to roam there. We do have the low price that we saw in the month of January. This is a low price for the year. That low came in at 1.04808. That would be another target on the downside for the euro versus US dollar. So breaking to the downside here in the dollar versus yen on the stronger inflation data. In the dollar versus yen, we're also breaking to the upside for the US dollar. If we take a look at this currency pair, we are making a new high here and above the old topside trend line here. We did fail on the break above here and then reestablish the level through here. So this level at 135.50-ish type area is now the break point to the upside here on the hourly chart in the dollar versus yen. In trading here today, note here that the those buyers against the 200-hour moving average did a good job here finding support against that level. Why? Because risk can be defined and limited against that level. So as a lesson, folks, if you have that opportunity to lean against one of these moving averages, try to do it every once in a while. Why? Because you might be rewarded with a nice little gain to the upside. Note here, the last time the price tested the 200-hour moving average, the price bounced off it as well. In this instance, the move led to a sharp decline. Probably had some data come out that led to that move to the downside here with the rotation to the upside. Anyway, buyers benefited, and we've seen the dollar yen move sharply to the upside. Take a look at the sterling versus US dollar, and it continues its move to the downside. And earlier trading today, the market fell below this swing area here. A number of different swing lows coming in play through here, and that formed a nice little floor. Admittedly, we went below it on a number of different occasions as well, but this area was a interim level where the market found support. And in trading yesterday, we came down to that level and bounced off of that level, and today we moved below that level and stay below it, keeping the bears more in control. Now, look at this area right through here where we have the 100 and 200-day moving averages converged. You can't see it, but 1.1934 is where those two levels come in play. And as long as the price, when we come down to that level, risks are going to be defined and limited against two daily moving averages. So that's going to be a key barometer for the sterling versus US dollar. That's what it looks like on the daily chart. These two moving averages, one coming down, one moving up. Get below that level, increases a bearish bias, move toward the 1.18408. Stay above it. and we could see a rotation back to the upside. So buyers and sellers will be battling it out at that 100 and 200 day moving averages. Again, go to our website at forexlive.com right now and register for how to get an edge in your trading news. My name is Greg McGlosky. Good fortune with your trading. Bye-bye.